What is good, everybody? Today we're going to run through the price action from August 1st, finally into that new month, hoping to get some better price action as the summer months are now starting to end and we're getting closer to fall in December. Super excited to get into the day. Let's go through the trade I made that was about 2R, maybe 400 on the eval. Super excited to show this, just how I applied my system and why it was so great in my opinion. So without further ado, let's just get into it. So today was beautiful. This is the trade I took, and this was this one that came right after that would have absolutely just banged. However, I think this was super great, and I didn't trade this one because it was just past my trading time. I was in class, doing some academic activities, not really checking out the charts, right? But let's just go over why this was so beautiful, right? Zoom out to the higher time frame and check out the narrative of the week, right? This week we had a whole bunch of new economic moves. We had a whole bunch of things that were definitely destined to change the market, a whole bunch of new controversy in with the Trump presidency and just everything like that. Bro, when Trump does something, the market will move, right? So checking out where we have all of this generated liquidity. Tell me how this later in the week news, when people say that ICT trading doesn't work, bro, I mean, this is one of those examples where you have to really look them in the eyes and be like, really, bro? Because look at this. We have been generating liquidity since the very beginning of this month. Right at the end of the month when we have all of our economic news, look at this, bro. Manipulation lower, take some internal liquidity. Manipulation leg higher, displacement to that manipulation leg, pull back, short down to all of this generated liquidity. This right here is a huge market maker sell model that is literally what we see every single time I take a trade. I'm going to show you guys exactly what I'm talking about. There's 3 models inside the trade that I took today. 3 models. Let's go over how I was able to overlap 3 models and why that made this trade so high probability. Understand that every time we add another overlapping model on top, when we have a daily model, like zoom out to this, right? This entire model right here, this was a huge daily model. So we're taking a long right here, daily model. We have a 4-hour model right here. We have an internal model right on this pullback and another internal model. That's 4 models. That is a super high probability long. And I mean, look, it banged. So zooming in right now, exactly what we see right now is this is going to become, if we continue displacing into the new week, this will now become changing the state right here, and we could potentially look to see some displacement back inside the range to potentially target some of this generated liquidity, maybe rebound to equilibrium, do something like that, right? We have to analyze this daily chart like it's a 1-minute chart, bro. Like, what can we expect it to go next, right? So let's actually get into the trade. We open the market right about here, right? So market opens at 9:30 right here, and at this point we had already almost pretty much taken out this drawn liquidity for this internal model, which is the trade that I want to take in the morning. On it, completely honestly, what we saw at 8:30 was a little bit of news put in this news candle. So drawing the wicks on both sides right here, what I really would have loved to see would be this equal low put in, and I would have loved to see the market open with the manipulation of the upside, and then we could have taken this super nice early morning trade, runners, and leave runners for that external draw. That would have been my favorite trade ever, to just get involved all the way up here and take it to the bottom. However, we didn't get that opportunity, so what do we end up getting instead? Looking at this, market opens and pushes. Like I said, I'm literally hands off, because at this point, market opens and it just starts dumping. What am I going to do? Am I going to FOMO in a short and then get stopped out because it wants to pull back? The market is either going to hit my drawn liquidity or it's going to rebalance beforehand, and then I'll be able to get in. There's really nothing to worry about, because you think about, like, what are you scared about? You're scared about FOMO. You're scared about not getting in a trade. Think of your actual outcomes of this right now. There's only a couple outcomes. I FOMO in, I win. Okay, that's crazy outcome. I don't press anything. The drawn liquidity gets hit and I sit there and I don't trade because I'm disciplined and I just, okay, it's not a trading day. I close the charts and I go do other stuff in my life. You don't have to work today. How hard is that when I tell you don't have to work today? That's really not a crazy thing to say. I'm literally giving you freedom. You don't have to work today. Go do other stuff. How hard is that? The third thing that could happen is it pulls back and gives us an opportunity to enter, and we enter and we take it to that internal and external low. And that's exactly what we waited for today, and we were able to make that happen, right? So looking in, what did we see happen? We saw complete displacement lower, almost hitting that external level like we were marking over here. I'm gonna quickly draw that in an NQ. This was the level that I had marked, and I wanted to see this level get met later in the day. And if you see on ES or NQ over here, we didn't exactly hit it, but we got super close. So this is the level that I want to see get hit for the day. So we opened this for a value gap and we end up kind of reversing back higher. A ton of people I mean, some people could have taken longs in here. I didn't really see anyone do it. This wasn't the highest probability. There's no change in the state. Really no good entry point. Unless you entered on this inversion, I don't think it was that bad. And this happened right at 10 o'clock too. So, I mean, I don't think this was actually a bad trade. Right on inversion, stop at the low, and then targeting for maybe 50%. I mean, that got hit really nice and cleanly. Super interesting strategy. However, it doesn't really follow the bigger time frame narrative. So that's why I'm not trading that stuff, right? So what do I wait for? I wait for fair value gap to hit, and if you guys know how I trade, you already spot exactly where I entered. Waiting for fair value gap to get tapped, equilibrium to get hit, waiting for some kind of manipulation, and then we just run lower, right? So right here, this was right where I was looking to enter, right? And the thing that made this trade just like the tip for me, like the most beautiful thing ever, was look at this. I was watching this play out, and I was like, okay, this is looking good, but I want to see this first. What I want to see, I wanted to watch this. If you draw a fib retracement from this news manipulation leg, zoom in and get this more accurate. We go to a 1 minute chart here and we draw this manipulation leg right here. Right when we tap 2, we start to pull back. And now what do you expect the market to do right when it hits 2? We start to pull back to equilibrium. So now that we've confirmed alignment with this, because we slowly started to pull back after hitting 2, slowly pulling back. Like this took 26 minutes, where this efficient move that moved twice the size, okay, it took a little bit longer, but still, this move was the same length and it moved twice the size, right? So it shows that this price action is efficient, the other one's not efficient. When we see low resistance liquidity on the downside, we see high resistance to the upside, we can expect to continue to see low resistance to the downside. That's a mouthful, right? So my trade, this looked perfect. It was aligned with the model, -2 standard deviation hit, pull back to equilibrium, looking for a great entry here, right? Change in the state would have been on this candle right here. We have kind of 2 order blocks. I wanted to really see this get hit, but when the market displaced through, I didn't really care about having that kind of high standards. So I just simply entered on the 1 minute. Short position right here, stop at the high, and then I targeted runners for this level. Why did I not target this as my first take profit? If the model is so great, why did I not target that as my first take profit? Think about this. When you're putting money on this trade, why do you want to, if you are waking up and you're actually looking at the chart and you put 500 bucks on the trade and you see the 500 bucks halfway through, when you're at this point and you see $500 times, you're up 1,500 bucks right now. And what reason would you not at least take a partial? If all of that 1,500 bucks just goes completely away, why would you not at least take a partial? The spots that I want to take partials are where we see the generated liquidity end. So look at just pattern recognition, bro. We see efficient price action up to this point, and then from there we start to see choppy movements to the upside, just kind of playing around, not really giving us efficient movement, right? It's efficient and then inefficient. And right when we come to that efficient area, price wants to rebalance back to that area because it was too efficient and we want to rebalance and then we want to go. So looking there, you could have targeted that 5-minute imbalance and that would have been a great R trade, or you could have looked for equilibrium of this range. That would have been the first take profit. My first take profit, it was after these equal lows got put in, and then I took this one right here for 2.2. Nothing wrong. And then I have my next take profit set at this low, and then my final plan was to leave runners for when ES takes that draw, that external draw right here. So just a little something, right? So ended up getting that first TP hit, 400 banked, and then stopped at break even. So about 450 up on the day on the eval, no problem. Still a little bit of drawdown. Don't worry about that. Why did this trade end up not playing out? And then why do we see this efficient model later in the day? This is what I really like to analyze. If we see the market is continuing to generate liquidity that entire time. So while we were in the trade, we saw an efficient move to the downside, and then we start to kind of sit here and still generate more liquidity, right? So when we see that get stopped out and we see that come back to this level, we zoom out and we say, okay, what are we pulling towards? We have another 30-minute fair value gap we already tapped into, but it just opened up a 1 hour fair value gap. Okay, looking great. 1 hour fair value gap opened up. If we zoom out, there's no better spot to draw equilibrium. We already have equilibrium tossed in. Everything's looking great, right? Now, analyzing this, right when we see this and we see consolidation at the top, this is setting up for an AMD model that gives us a short. And if we look, we see SMT, literal perfect manipulation at the high. I want to be trading the weaker one here. I've just proven it in my system to be better when I have an internal SMT, and as well, ES looked weaker. If we look at this range, ES wasn't moving as high as NQ was. NQ was almost breaking at this point. ES was barely getting up there, right? So ES was just lower. I would have wanted to take the trade on that change of the state. So right about here, tapped, literally be 0 drawdown, completely efficient movement. How would I want to have left runners for this? If we're trying to be conservative, we're trying to be realistic about this trading. Fib retracement, look right here. First would probably be 2, honestly. I mean, just completely honestly, dude. You don't want to be targeting much deeper into these for value gaps, because what if this is bullish order flow? This is higher time frame bearish order flow, and then we see bullish order flow. This could continue, come stop you out, and then it could go, right? So I want to be taking this, right? Conservatively, you can take this, honestly. Probably what I would have taken is just that start of that 5 minute for value gap, right? I would have taken that, maybe left for 2, left for 3.5, left for this low, and then finally this low. And I mean, this trade is beautiful. This is everything I want to see. It's an amazingly efficient model. Zooming out to see where you could have entered back. If you got a 5 minute change of the state and you wanted to zoom in, let's quickly look at how that would have played out. After the 5 minute change of the state, we start to see 5 minute change of state. We see a pullback to 3 minute, and we see this order block get tapped. So this would probably be the most clearest area that price wanted to react off at that moment. So on the 5 minute change of the state, I'm probably going to want to be looking for some kind of 30-second entry. So zooming lower, see what we could get off of that. So on this pullback, ooh, really not much. Let's look at the 15-second. Yeah, really not much here for an entry that could target that internal low and then still continue to play out. Like, because that's how I like when I trade internal models. I want to take that internal low-hanging fruit and then leave for nerves for the external draw. We really don't get that here. We don't see an efficient model playing out right here, right? So I mean, nothing wrong with this. This was a beautiful move, and I think that looking at this range, how I can make money off of this movement that looks like baby food when you just zoom out. It looks like this when you zoom out. I can make money off of this movement, and I don't need to catch this entire thing. I can catch literally, how many points is this? 15 points. Like, I don't need to catch anything past that, because I understand that this is scalable. This is a long-term game. This isn't a now game. This isn't a let's catch home runs every single day. This is a let's catch consistent catches. Let's catch consistent strikes. Let's catch what we need to do to stay consistently afloat and consistently growing as traders. And that's what this game is about. The sooner you realize that, and the sooner you mature and stop saying, dude, I'm trying to catch the whole weekly range, leave 20 R runners, that's when you start to find consistency in your trading. So thank you all for listening. I hope you guys learned something from this trade recap. And if you look at how we were able to overlap pretty much 3 models today, you will see insane clarity once you understand how much higher probability that just makes things right alone. So thank you all for listening. Hope you guys learned something. If you have any comments, throw them in the comments. Just any questions, throw them down there. I'll be the first to answer. Thank you all for listening, and I hope you guys learned something from this. Go into this weekend loving the process, loving the journaling, loving everything that we do as traders, and just literally loving sticking to our system and staying disciplined. This is not something that we want. It doesn't have to come to us. It is a blessing that we can potentially have the outcome that we want. And that's truly the truth. Don't strive for it. Just arrive as that profitable trader, and you guys will see stuff happen. Thank you all, and let's pray for a great week tomorrow. Peace out, boys.